Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. VA Tech Wabag is a stock in focus. It's not just because of the earnings that they would have delivered in the quarter gone by or the bullish reports that have come in from brokerages such as Nomura about what the business and therefore the share price can do over the course of the slightly medium term. The idea of talking to the guest today or the company today is to figure out whether the last 1 year, the COVID impacted year, and the resultant focus of the government on the business or in the business areas that they are present in changes the trajectory of the business in a material way for the next 3 to 5 years or no. And to talk about that, Mr. Rajiv Mittal, Managing Director and Group CEO of VA Tech Wabag joins in. Mr. Mittal, great having you. I hope all is safe.
Good morning, Neeraj. All is well, and hope same on your side.
Yeah, touch wood. God is kind, sir. So let's talk about exactly what I wanted to start off the conversation with. You reckon that the business environment is, from a short-term perspective, improving gradually as we are looking to open up? That's the very near-term answer that I want. And slightly medium-term answer, do you reckon that last 12 to 18 months have made you believe that there is a, how do I say, a trajectory change of sorts in the way your business was functioning and is and will be now functioning?
Sure, Neeraj. I think first I would like to tell our viewers that Wabag is a pure play water company and ranked 4th in the global water business. So we are into a business of building plants and also operating and maintaining this water and sanitation plants. As COVID had set in last year, towards early last year, we didn't find a major change, especially on our service business, which is coming under the essential services, because we supply water and also maintain the sanitation of various towns and cities. So I think we were working from that point of view at 100%, because we cannot stop supplying water or treating the wastewater. So that way, I think the business didn't impact. On the EPC side, being a technology company and an engineering company, a lot of our work was suited to work from home. So most of our engineers were working from home for the engineering part and the procurement part, and that way the business was not impacted. Yes, there was some impact on the C part, the construction part, which did take a hit because a lot of migrant laborers moved out. But as soon as they started coming in from second quarter onwards, you have seen our results for the last year. The things started picking up, and we did almost 11% better than the previous year in the overall yearly terms, though there was a complete washout of the first quarter and part of the second quarter on the construction part. That shows that we have a good order book. We are getting traction on that order book, and hence we are well placed. Now, when the second wave hit in just a few months back, this time we were well prepared. We didn't even allow our migrant laborers to leave site. In fact, we brought all the facilities for them in the labor colonies where food and vaccination, everything was arranged for them in the labor colony. So they didn't have to go out. And luckily for us, our business is all in 4 walls in a premises. So we arranged all that where the labor could stay there and work. And that has even less impacted this year compared to the last year. So going forward, definitely as a water sector, we see a lot of business, both internationally and in the country, or both on the municipal side and industrial side. We see a great future.
So net, you're saying that there was no material change that you expect pre and post the unlock, because for you, work was almost as usual.
Yes, Neeraj, the supply chain management was affected. Some of our suppliers could not operate their factories, but we were not that badly affected where some of the other business were affected. Maybe 10-20%, yes, but not that much, which we are very sure, as we demonstrated last year, towards the second half of the year, we will pick it up and we will supersede even our last year.
Yeah, actually, I'll come to those numbers because most people expect you to do that. But just before that, you mentioned the order book. Can you talk a bit about that order book? I was reading a report, I think from Nomura, which said that one that the size of the order book and the chunkiness of some of the orders has impressed them, and they believe that almost the entire order book is executable and executable over a shorter time frame than the historical past. Can you talk a bit about the order book, the color, the execution timeline, so on and so forth?
Absolutely, Neeraj. I think we have made a very conscious decision that we will be very choosy on our orders. We have a good order book, almost 9,500 crores, which is almost close to 3 times of our yearly revenues. So there is no hurry or no desperation to go and pick any orders. So if you see, most of our order book are either central government funded, which are Namami Gange, Amrut, and other schemes of central government, which have sovereign guarantees. The other part is multilaterally funded. And those are all, whether it's Japanese government, World Bank, Asian Development Bank, and KfW. So this is where predominantly our book is consisting of. And if you go international, these are all again sovereign. Most of them are governments of the various countries. And some of them are even giving us letters of credit to do our business. So our focus is always nowadays on cash flow to ensure that we have a good cash flow in this business. And this order book is generally executable over 24 to 30 months. We would expect it more towards 24 months, but being a lot of them being government contracts, there are various constraints. So now generally it takes about 30 months to execute a contract in our business.
So what was the order book number, Mr. Mittal, say end March or maybe end May, if you can tell us?
9,500 crores, Neeraj.
At the end of March.
Correct.
And I reckon that as the states unlock, you would expect the order inflow to pick up as well, or have you seen normal order inflows for this quarter too?
So we are expecting good orders because our order pipeline is very solid. There's a good visibility on order pipeline both in India and international. As I said before, our focus will be to push more international projects and also industrial projects. We have done very well in industrial in the past, and we are going to capitalize on our references and experience, especially in oil and gas. We see oil and gas is picking up, and that will give us a good order intake this year.
Yeah, so actually, I kind of expected you to say that. So tell me, Mr. Mittal, would these choice of segments that you spoke about be a factor of the IRRs in them, or it's because you are more comfortable there, or the receivables are more dependable? What is leading you to choose these sectors and focus on these segments versus the others?
First, I will answer your second part of the question, Neeraj. What makes us choose a certain segments? See, generally, if you see our competition, they come from construction background. Their capability on executing a highly complex, engineering-wise challenging projects is very difficult, and their references are very limited. We, right from day one, when we came to India, the first job we did was for Reliance Jamnagar. That time they were setting up their mega refinery project, and we got that project. So our birth took place in oil and gas. So we are extremely confident. Now, who's who of oil and gas, whether it's Aramco, whether it's Petronas, whether it's OMV, you name it, oil and gas, we have done well. Even now we are doing for Dangote, we are still executing projects for Reliance, IOCLs of this kind. So nobody has a better experience and a reference like us. And hence, we will have a technical advantage, and also experience-wise, clients would prefer us to do. That's number one. We choose this segment where we do, and even on municipal side, we rarely would go for conventional technology. Being a technology company with 95 patents, we always choose a project where we can use our proprietary technologies, and that way have an edge on even the economics of the project. So we would go mainly for reuse and recycle projects, desalination projects, or very high standard of treatment in the water and the sewage treatment plants. Coming to the first part of your question on IRR, Neeraj, we are basically a EPC company and a O&M company. We do not work on IRR. We don't invest money. We are an asset-light company. And we want to be asset-light. That has been our philosophy of doing business for over last 25 years in this country. We have not invested, and even if we have invested, we will invest very small, and I'll come to that, what we do in our HAM project. But we don't work on IRR. We work on our EPC margins and we work on our O&M margins. By the way, if we invest in a couple of projects, our equity, we take that income as a plus over our EPC and O&M business as a bonus. But IRR is never our focus of doing a business.
Okay, let me then ask you whether the segments that you've chosen are segments with higher margins, and therefore,
Yes.
Do you reckon that consolidated margins for the company over the next 2-3 year period, as more and more orders are in these segments, will they move up?
Definitely. One, as you rightly said, Neeraj, yes, because of the segment we are choosing and the businesses we are choosing and the types of projects we are choosing, funding pattern we are choosing, we would believe cash flows and margins will move up. There is no doubt about that. And second thing also, we have taken a conscious decision that we will take projects where the construction element is as small as possible. Sometimes we cannot avoid because client is looking for a single point responsibility. Our domain expertise lies in our engineering and procurement. So we will focus on that. And if we have to take construction only and only then we will take construction. So that's another way forward we are going to move in the years to come. The construction portion we will like to reduce in our overall revenues.
Sorry, I was on mute. Yeah. So you reckon that there is room for console margins to move up maybe 150, 200 odd basis points in the next 2-3 years at least? Or you're smiling, which is more?
Definitely it will move up. I will not have an estimate offhand, but the way we have drafted our strategy document for next 5 years, these are some of the strategies which I've just told you, and this is basically to move up the margins.
Got it. Okay. You spoke in an earlier answer about HAM projects. Now, can you talk a bit about those? There are 2 large ones. I think they are from places of repute wherein receivables will never be in the question, so to say. Can you talk a bit about these 2? And therefore, the second part of my question, just for that, is that whether the future HAM projects that you get, if you bid for them, etc., would these be of a longer tail and a higher value, so to say?
Yes, Neeraj. When the HAM projects first time came in under this Ganga cleaning program called the Namami Gange program, NMCG, we were in dilemma. One side, we have been doing business with asset light. HAM projects expected us to invest 60% in debt and equity. So we were wondering what to do. But we also could not let such an important program to go. One, from a pure patriotic point of view, the holy rivers of the country, if a leading company will not take part, who should? Number one. Number two, this is also a big business because cleaning this water before they go into any river is, I think, not only a social responsibility, it's also a business opportunity. So we applied our mind and came up with a scheme that we will participate in this project and we will remain a minority equity partner. We will not take the majority. That way we will remain asset light. To give you an example, you mentioned about 2 projects which we just closed, one in February and one in March. We achieved the financial closure. The first one, we had the first time IFC was investing in Namami Gange project and they decided to partner us. We are honored with the IFC being our partner for this Kolkata HAM projects. And along with them, Tata Cleantech was their partner of IFC. Jointly, they have taken the debt. And we had an equity partner, which was again from Eversource, which is again a London-based fund, plus the India NIIF, joint venture of that. They have also taken the equity because 75% of equity will be taken by Eversource and 25% by Wabag. Now you can see This is one we did. And second one was this Patna in Bihar, where we again did a HAM project, where again it was done by PTS services, where they did the debt and we did the equity. Now, total value of these two projects is about 1,750 crores. Okay, and our equity portion is less than 50 crores. So you can see it's just about 2.5–3% of the total project is our equity contribution. And that's the reason we say we remain asset light. Now, this 2.5–3% can be easily recovered through our EPC margins. So whatever equity we are investing, we can recover easily in our first 2 years of our EPC execution of this project. And that way, we will have an EPC project which will give us a normal EPC margin. And then after that, we'll have 15 years of O&M, which is also one of our vertical and a very important service area where we will operate and maintain these plants for 20 or for 15 years after we have constructed.
And what's the average? I'm sure it differs for different projects, but roughly, is there an average O&M annual maintenance size that you have in general?
See, today, if you talk about O&M projects on a yearly basis, they can be of the order of magnitude of 30–40 crores.
Okay. Fair call. Now, the reason why I was talking so much about some of the partners that you have in these projects is because we know that in the past, your company has had an issue of receivables, right? So I have a two-part question, Mr. Mittal. One, about 425 crores worth of state receivables, the past ones. Is there a hope that you harbor, or not a certainty really, but a hope that you have that these could come about? And part two, would you therefore stick your neck out and say that what's happened in the past, the future in terms of receivables turning sour because of the nature of the organizations from which you are bagging these orders?
True. Again, I think first about our Genco receivables, which you are talking about, the project, the 425 odd crores. See, this is a job we all know, we have done it. This is receivable by us. Projects are handed over. Anybody can see into the net. Their power plants are working. For last 4 years, they are producing power, selling the power to the discoms. So plants are operating. Now, because of the nature of this project, they had a 20% retention. It can be only paid at the end of the project. And towards the end of the project, the partner who had gone bankrupt just wanted to try and see if they could get any money. Though they did not participate in completing the project, all the headache and the financial burden we had to take, they tried to give an arbitration notice to our client. Our client challenged it in the Supreme Court. Luckily, very first hearing, it was put on stay. But post that, we know 18 months, Supreme Court had no physical hearings. And because it's on a stay, it is not on an urgent basis. That's where our payments are stuck. And same way, the other one is in the High Court, which is also stuck because of the High Courts in Andhra and Hyderabad are not on. Both are sub judice. So your question is, am I hopeful? Yes. If I'm not hopeful, they will not be on my books. I would have written off. 100% I'm hopeful. I've done a good job. Client is very, very sympathetic towards us. But being a government client, unless the arbitration issues are solved, they cannot pay us. As soon as the arbitration issues are solved, which I believe, as soon as the Supreme Court opens, it will be solved. We should be able to collect our money.
And suffice to say, you don't foresee such problems to come in the future, or can they?
We are in business, Neeraj. It will be not correct on my part to say such things cannot happen.
No, I was only
Our
wondering.
aim would be to see that they don't happen that often, and we learn something. See, past only gives us experience to shape up our future, and this is a past experience we have. Since then, we have not signed a single contract where we have a partner and we are not in the driver's seat. We don't have a management control. All the projects which we have signed, where we had to use some partners, we were always in the management control, we were in the driving seat. So even if some partner goes bankrupt or are not performing, we can easily replace and do the work, because anyway, 70-80% of the work we are doing, balance doing. In this, the earlier case which you talked about, we were hardly 15-17%. So for us to take a burden of 80% was a big thing. But when we are 70-80%, to do 20% is not a big thing. That's a learning from the past.
And hence my question. Sure, things may happen, but the likelihood of very large issues is behind you, you would say.
Absolutely. I fully agree.
Okay, great. Okay, your investors will be happy to know that. A couple of bookkeeping questions. Almost everybody, company which uses commodities as input costs, is battling with these rising commodity prices. Can it impact your near-term performance, not in terms of execution, but in terms of rising input costs? Or do you have a pass-through for almost everything?
Neeraj, yes, I think it's a known fact. If you go to London Metal Exchange, you can see how all the metals, in fact, have gone up. How the plastics have gone up. Yes, you're very right. The commodity costs are going up. It's a matter of concern for everybody, not for us only. But that way we are lucky. Most of our projects, as I mentioned, are 24 to 30 months. And when you have such a long duration project, we always have an escalation formula. It doesn't cover 100%, but 70% of our costs are covered there. So yes, it will have some impact, but not a major impact, because it's everything, 70% is passed through.
Okay, great. So now that you are net cash positive, Mr. Mittal, and you have done a remarkable job on that front in the last 24 months, would you utilize this monies or the cash and the cash flows that will come to you in FY22, FY23 to plow in more growth, bigger projects, so on and so forth? Or would you look to reduce debt further? What's the strategy? It could be a combination of both. What want to hear from you?
Exactly. It's a combination of both, Neeraj. As you rightly said, you can imagine that our priority definitely is growth. We have been always an aggressive company. We started as a startup company almost 25 years back in 97 with first job with 6 people. And today we are globally number 4. So I don't think anybody has this kind of a growth in this sector. And that way Wabag has shown that they are an aggressive, goodly growing company. In future also, we have no intentions of just consolidating. We have enough opportunity. Our technologies are growing, our experiences are growing, markets are growing. So why we should not grow? So growth is definitely on our agenda, and we will grow. But also at the same time, we will try to keep our debt levels low, and we will try to maintain the net cash positive in the growth.
Any numbers you can share on the debt front, sir? Would you look to take it down to particular levels from where it is right now?
See, I think the point is, as long as we can keep it cash positive, if we have cash in the business, and if we need some short-term working capital, because we have 20 countries, each country, we don't transfer money from one country to another, neither we have a cash pooling methodology. If a project needs a short-term borrowing, the local entity will borrow, and as soon as they get the cash from the project, they will repay. So there will be some debt in the books, but the idea will be to, at a group level, to be cash positive.
Okay. Fair call. So, and then therefore, give us some color on growth. Now, you sounded very confident or very, how do I say, assertive about the focus on growth. The estimates range from all the way to 4,000 crores for FY23 to maybe 3,200, 3,500 for FY22, and then better margins and then better bottom line performance for your company. What's your sense? I think
these analysts have been tracking us for last 10 years. This is our 11th year since we were listed, Neeraj. So I think they know our business very well. Earlier, they were expecting a quarter-on-quarter growth. but we are not a manufacturing or a consumer business. We are a project business. Everybody knows it's a lumpy business. So at least on a yearly basis, they have seen we have grown at a IRR of 15-20%. And if you take that kind of growth, and the numbers you said are not unreasonable.
But you expect this 15-20% growth trajectory to last well beyond FY23, I presume?
Yeah, absolutely.
Maybe improve upon it?
I think depends on what kind of opportunities are there, how government spending is coming up. At the moment, what is coming up, you see, we have a Swachh Bharat mission, we have Jal Jeevan mission, we have Namami Gange, a lot of initiatives from the government on the water side. I think we have never seen this kind of spending from any government in the past. Now, this government has been focusing on water and sanitation. So I think this is the best opportunity to capitalize on it, take your share, and select your projects and grow profitably.
My last question, Mr. Mittal, to fund any of this growth, and even if growth moves up as well, would you reckon, as things stand, internal accruals would do the trick, or would you need to raise any kind of equity capital for the same?
No, I think, Neeraj, you can see 25 years we have been in business, and it's 11th years, as I said, after we went for IPO. We have never had to raise capital from the market in this 25 years. Other than the IPO, that also we did mainly to give exit to the private equity companies who had invested in us. Very minimum, around 120 crores only came to the company, and that was used for this corporate building where I'm sitting today and for our IT infrastructure. Not any money went into the business. All our growth is funded from our internal accruals, what we have earned through our projects. Now, recently, we had last year, about a year back, another 120 crores from some marquee investors. Other than that, in 25 years, we have had no capital raise. And my belief is, if company keeps on doing the way it is been doing, generating positive cash flow, operating cash, free cash, we will have enough cash to fund our future growth.
Well, we wish you all the best for that, Mr. Mittal. Thank you so much for taking the time out and speaking to us at length about Wabag's future, and congratulations on a fairly good performance in FY21.
Thank you, Neeraj, for having us here, and have a good day.
Thank you. To you too, and viewers, thanks for tuning into this edition of The Talking Point.
Thank you very much. Bye-bye.